Good morning, everyone. Welcome to Officer 24/7. My name is Neharka Walia Bhatnagar, and I'm with you with the area of ABFM. And what are we talking about today? We are done with the uh, almost the entire module C. This is the last chapter of module C, deal structuring and financial strategies. Once we are done with this particular topic, then we will start with the specific area of revision of this topic only. That means entire module C. So what are we talking about today? When we talk about this specific topic of deal structuring and financial strategies. Acha, what do you mean by deal structuring? What do you mean by the term deal structuring, everyone? We are having a deal where we might be having a merger, acquisition, all those things, restructuring, whatever we are deciding, we have to look forward towards that area where we are getting clear about it. Now, to the time we are not clear about what we are dealing with, and are we making the compensation in cash or in the form of shares? What are the taxation based scenarios where we are going to work upon, all those things has to be taken into consideration. Only and only then we can look forward towards the entire area, isn't it? So that is related to this particular chapter, deal structuring and financial strategies. So here comes the first question. Everyone, what would be the answer to this question, everyone? What does the process of deal structuring and acquisition involve primarily? Firstly, what does it include? Is it the determining the target liabilities or allocating risks and achieving major objectives or finalizing the payment method or obtaining financial options? What's the first and the foremost thing that they have to see? When we talk about what is the process of deal structuring in acquisitions, acha, acquisition means purchase. We are acquiring the other organization. If we are acquiring the other organization, then one of the major things is the first thing is always looking at the objectives, na everyone. So this is related to the area of allocating the risks and achieving major objectives. So in this case, the first and the foremost thing is always allocating of the risks and achieving the major objectives. What is risk sharing in context with deal structuring? Acha, risk is something that the more you distribute, the lesser it becomes. This is one of the realities of risk. Sharing profits equally between the acquirer and the target, distributing the liabilities of the target organization to the acquiring company, allocating risk between the parties involved, or splitting ownership rights and responsibilities. What do you mean by the term risk sharing? Of course, risk sharing plays a very important role in every organization. See, because till the time you're not sharing the risk among different people. For example, banks do this part, refinancing, syndicate loans, all those things happen because banks know that sometimes it's not possible or worth it to take all the risks on their own. So in this case, this is based upon allocating the risk between the parties involved. Okay? Because we are spreading up the risk among different people. This is spreading up of risk. In the context of acquisition, what is the overall consideration method? Payment, approval, risk, allocation. In context of acquisition, acquisition means acquiring again. What is the process? What is the overall consideration method? How do we pay everyone? Payment method, consideration, or approval, risk allocation, or financing. It is the payment method. Consideration means what? What are we going to pay for that particular company that we are trying to buy? Right? Next point. Why is the corporate structure frequently utilized as the acquisition vehicle? Limited liability and flexibility in financing, tax-free deal options only, continuity of ownership only, or taxation benefits only. corporate structure frequently utilized as the acquisition vehicle? Corporate structure is basically the organization structure which we are talking about, and once we change the restructuring and other things, then obviously this is something which changes, you know. So why is this particular thing done when we're talking about acquisition vehicle? In terms of acquisition vehicle, the correct answer here it would be limited liability and flexibility in financing. That's the answer. What is the primary consideration for using cash in the form of payment acquisition, everyone? What is the primary consideration for using the cash as a form of payment and acquisition? In terms of this, is it borrowing capacity of the target company, high credit rating of the acquirer, desire to preserve control after the acquisition, or size of the acquirer's cash balances? What's going to be the answer? See, the point is when what is the primary consideration in terms of cash payment? Whenever we are making the payments, what is that particular thing? Ultimately, when we are making the consideration payment, it is always a desire to preserve control after the acquisition. After you purchase the other organization, you really want to still maintain your control in the other organization, because ultimately, the day you lose control, the organization's hold that you have or you possess is gone. Why do the acquirers with large cash holdings tend to make stock offers rather than cash offers? Target preference for acquirer stock, desire for tax benefits, preservation of control, or low credit rating of the acquirer. If you have low credit rating, then obviously the chances are less that someone else will basically take your money or involve with your company. So technically, this is something I'm ruling out altogether. Why do acquirers with large cash holdings tend to make stock offers rather than the cash offers? Desire for tax benefits? Not really. वैसे तो this is a part of it, because when you are giving shares instead of shares, in terms of amalgamation, yes, there is no taxation. Preservation of control, it doesn't really matter, because if you're giving shares to someone, then your control is gone. So eliminating this part as well. Target preference of the acquirer stock. So that means I had an eye on the shares, and I'm like, okay, if I'm getting a chance, I will buy your shares. That's the point. Target preference for acquirer's stock, everyone. Acha, next question. What might lead an acquirer to choose cash in the primary form of payment in acquisition? Why would someone take cash? Technically, when you are, so this is acquiring, but in terms of amalgamation, we have a different scenario. In terms of amalgamation, what happens is, even if you paid a single penny of cash, the entire transaction becomes taxable. If you do not pay in terms of shares, you give it in the form of cash or any other kind, then it is taxable. But if instead of shares of one company, you get shares of another company, then there is no problem. Since there is just a movement of shares, then there is a point where there is no capital gains on it. Matlab, because obviously you still have asset of one company to asset of another company. There is no difference coming up now. There is no overvaluation of target shares. Acha nahi. Well, this is what I'll talk about, the era of capital gains. Okay. So that is capital gains. In terms of acquisition, it is definitely different. The one which is selling is subjected to tax, but the one who's buying is not subjected to any tax till the time he's not selling it. Done? Okay. Then overvaluation of the target shares or low credit rating of the acquirer. Then is fear of undervalued shares or desire for tax-free transactions. What's going to be the answer? What might lead an acquirer to choose cash? If someone is choosing cash, then probably because they choose as the primary. Overvaluation of target shares is not the answer. Acquirer means the one who's purchasing, है ना? The one who's purchasing, for them, shares is a different scenario. Low credit rating of the acquirer. If they have a low credit rating, then they cannot look forward towards that. Fear of undervalued share. This can be a point. Obviously, if you think that the shares might not be at its true value, then it can be a different scenario. And then is desire for tax-free transactions. I think in this case, the answer has to be D only. You have a desire for tax-free transactions. You sometimes just play with the cash, and you sometimes don't even show that there's a movement of cash. Next question. Why might acquirer stock be used as a principal form of payment in acquisition with a long integration period? If you're looking forward towards long integration period, desire for tax-free transactions, potential reduction in existing shareholder base, or reduction in total debt needed for the takeover, or fear of undervalued shares. Long integration period. Why would someone actually take a long integration period? Actually, no, when you want a long integration period, probably you have some liabilities which you want to take care of. You know, that can be the point, won't it be? So in this case, reduction in the total debt needed for the takeover. You really want that, because tax-free transactions is not the point where you're looking forward to long integration period. No, potential reduction in existing shareholder base. No, this is actually share reduction, but this is not the point. Fear of undervaluation is also not there. In this case, it's all about you just want to reduce your total debt before needed for the takeover. Because if you want to take over, or anybody else is trying to take over, always remember, if the liabilities are too much, then what will you do? We'll be stuck with that thought. Ki, Arey, the liabilities are already too much. How will we cater the entire work? Right? Genuine problem. I'm sorry. So let's move on towards the next question now. Oh, this is actually in a mixed. Uh, the term is in. In a mixed or payment offer, why might the target company prefer the combination of cash and acquirer stock? What would be the reason? Why would someone look forward to what's mixed? But when we are looking forward towards the cash now, obviously, if we buy, if we are just getting the shares of that in terms of while making the payment, that the problem would arise, because in this case, the major problem that would occur is that in this case, you want to have tax-free transactions, no need for cash. Basically, the tax-free transactions aren't there at all. There is no undervaluation or overvaluation. In this case, you need money so that you can actually, first is you have the particular organization. Second is, in this organization, it has become a specific working there. What we would definitely want is that when we have to pay for the shares, we can pay from the money itself, rather than selling a share to arrange the funds for the particular transaction. That is better than in this case, need for cash to pay taxes on the sale of shares. That would be the answer. How does a multiple option bidding strategy generate uncertainty? What would be the answer to this question, everyone? By predicting the total amount of cash required, by predicting the number of shareholders choosing each option, by incorporating a proration clause, or by reducing the overvaluation of acquirer shares. How does the multiple option bidding strategy generate uncertainty? Basically, it is generating too much of uncertainty because in this case, we are determining the number of shareholders choosing each option. Okay, this makes the entire thing very uncertain in nature. What provision in the merger agreements and tender offers help acquirers determine the total amount of cash they would be required to pay out, everyone? Overvaluation clause, proration clause, dilution clause, or convertible securities clause? Which specific clause? That is proration clause. Overvaluation is the valuing it at more than the share price. Dilution means giving up on that particular portion of your the core. We are actually giving up the shares to someone else. And convertible securities matlab the shares can be converted into debentures. Sorry, debentures can be converted into shares, because every time an organization will always try to convert their loans into shares. That is proration clause. Why might bidders hesitate to use stock over offer convertible debt as a form of payment? To avoid proration of shares, to reduce the overvaluation of acquirer shares, to facilitate tax-free transactions, or to indicate their belief in the nature of the target company. We are always doing this scenario so that we can actually reduce the overvaluation of the acquirer shares. Because if there is an overvaluation, the chances are high that later on the organization might be facing backlash from the market itself, right? Okay, so in this case, what's going to be the answer? The answer will be D. Done. Chaliye. Then let's move on towards the next topic. When is a transaction considered taxable to the shareholders of the target company? Everyone? What's going to be the answer? When it involves a majority of the consideration in the form of equity, when it involves a majority of consideration in the form of cash, debt, or something other than equity, when it involves a majority of consideration in the form of convertible securities, or when it involves a majority of consideration in the form of stock. The answer is when there is a mix of all these things: cash, debt, and something other than equity. Done, everybody? I hope this session was helpful for you, everyone. And I'm with you with the area of ABFM. Actually, everyone, I think you all know in May the registration would be starting. So I hope you're all set that in a very little while you will be all into your examination mode, and I hope you have already started thinking of what you're going to do at that point of time. What are the things that are most important for the last day preparation? All those last day things should be done by you, right? So that sorting up should have started right now. If you haven't, then I believe you it's high time that you sit down and talk to yourself that what is it that you want to do, whether you want to go for this attempt or you are thinking about some other time, and if you are planning for some other time, then when. Because investments are to be made, your bank promotions. See, there are two three things in a banker's life which becomes very important as a professional, right? First is your number one thing that can be uh, JIB, then next level CIB, then your max, the bank promotions, and then for your progress, you also go for certifications. All these things adds up to your exposure towards your work, and slowly, steadily, you know where you want to go in your future. So that kind of clarity, if you're looking forward, then you have to start working there, right? Okay, with this, everyone, first of all, please share the session, like the session, and don't forget to subscribe our channel if you haven't done it yet, right? These sessions are super important for all the bankers who are planning for this attempt. So please go ahead and share it among your peers as much as possible, right? Thank you so much. Let's continue further. We are continuing with our victory series. Acha, there's a good news as well. That is, if you're planning to purchase our CIB courses, then this is a good time to go for it. Why am I saying that? Let's look at that reason. Acha, let's go on to our website first. You go on to our website, that is www.adda247.com. When you go on to this area, you will find it in terms of CIB June 2024. Double validity is going on. I believe the perfect time to purchase it when the double validity is going on. Double validity means you pay for 6 months, you get for 12. It's a huge relief for anybody, I believe. You know? So in this case, what you need to do is you need to use the code Y541 Y541 and you can apply it. You get for 6823.95. But the most important part is, in this case, number one, you will get another set of discount. This will cost you, this is currently at the current price was 32,495. If you go for 80% discount, as is 79% on the website, in our courses it will turn into 80% if you are using our app, you know. So if we look forward towards the price, if you go for 80%, it will come out to be 6499. That means 6500 rupees you are paying and you are getting for 12 months. 12 months validity, and that too Mahapack means English medium, then number two, English medium included, bilingual included. Then Mahapack includes mini marathons, Maha marathons, right? Then this includes test series, ebooks. So 6 7 benefits. I am just giving you one of those important things that we are providing in our courses. So if you're planning, then hurry up everyone, because these offers really don't last for a longer period, and planning your investment in terms of these examinations is definitely required, because you need to be very clear, when are we starting, when do we work, what are the things that is most important for us. If we do not look at all these basic points, how will we survive in the examination, right? So with this, let's move on. And if you're planning for purchasing these courses, then hurry up and go ahead and use the code Y541. Okay, now comes our session. We were continuing with their of victory series, so let's continue. Today I have got a blend. I was thinking to have it per chapter, but now I'm thinking to go for the blend today. So that's why today it's a blend of multiple questions from multiple areas. So I hope this session will be fruitful for you. Okay, everyone, here comes the question. Which one of the following has the maximum potential to contribute to the development of an intelligent system? Philosophy, biology, sociology. Only 1 and 2, 1 and 3, 2 and 3, or 1, 2 and 3. What's going to be the answer accordingly, everyone? What's that particular thing that you think would be the answer? See, when we talk about biology, sociology, everything plays a very important role. See, genetically, how fit you are will determine your professional life as well. That always does. Philosophy, it's the ideology of a brain. And then we have sociology. Sociology is basically how humans are interacting with each other. So when we talk about the intelligence system, that is basically D. All these three things are required. First of all, you have to understand a human body, then you have to understand the ideology of a human being and how they interact with each other. All these things are super duper important. The term that most accurately captures planning is, what is going to be the answer in this case? Just a moment, I think I have to adjust the question a bit. C part is not visible, so adding up the C point as well. Is it visible now? What is something that defines planning, everyone? Planning plays a very important role, right? So the most accurately planning can be defined through what? Planning is basically thinking in advance what to do, when to do, how to do, and who will do it. That particular part has to be clear. Otherwise, now by the end of the day, everybody's gonna fight with each other over this simple thing, ki who has done the work and who hasn't. So once we divide the work, split it up among different people, it becomes a little better. ठीक है ना? So in this case, how do we define it, everyone? चलिए, let's look at it. All the encompassing procedures of planning, execution, and monitoring. Planning is not related to the area of execution at all. It's just a brain exercise, brainstorming sessions, what to do, how to do, who will do it. All those questions come up with ideas of how the goals of an organization can be accomplished. We can look forward to it. You know, it's actually a futuristic vision. Determining the goals of an organization as well as the strategies to achieve those goals. That's one part that we might be doing. You know, you might determine the goal, you might look forward to the basic working. You know, that is also very, very important. In this case, what's going to be the answer? Determination of an organization as well as strategies. I think that can be the point. It's a broader point of view. Now, you're not looking at yourself only, you're looking at the higher level. How are we looking at the higher level, everyone? We are looking at things in terms of working all together, isn't it? When we look at the business, we are always looking at what do we have in thoughts when we are starting today. And the primary focus of the work is done by the planners and planning departments. Primary focus of the work is not really done by them. They're just thinking. Executioners play a very important role. If I say these people, by just thinking I can study properly, then I wish I could. By just thinking it doesn't work. I have to sit down, grip myself for a moment. कि अरे पढ़ना शुरू करना पड़ेगा. I have to start right away, and then you start. You know, all those things are there and which are gonna affect your mentality. And over the period of time, you're working as well. So execution plays a very important role. Planning plays an important role. But the point is, see, determination of the organization goals and then strategies, how to achieve it. First of all, you need to know what you want to do. And then once that particular thing is decided that what you want to do, then you proceed further. That clarity is definitely required. Till the time you're not clear about what you want and how do you work upon it, then there's a major problem, right? So that's why the organization shall focus upon itself first and then continue with the next level. Done, everyone? Chaliye then. Let's look at the next question then. What is the formula for free cash flow to equity? This is a question from module C and B. This is a blend of both areas because this is covering both of the topics there. So what does this topic exactly say, everyone? It says the cash flow from operations minus capex, capital expenditure, plus net debt issued. Then cash flow from operations minus debt issued plus capex. Then we have cash flow from operations minus capex minus the net debt issued, or capex plus the debt issued plus the capex. Capex is basically the capital expenditure. If I buy an asset, that is covered here. ठीक है ना? That is required. In any business, these things play a very, very important role. In this case, what's going to be the answer? The answer is actually cash flow from operations minus the capital expenditure plus the net debt issued. Basically, the debt the capital expenditure is not going to be a part of our organization's thought process and working. So we're always looking at a broader point of view. Chali, let's look at the next question. It says, which of the following is true? The fifth criterion of ethisphere is leadership, innovation, and reputation. It is often our shared responsibility among the officers and the followers that cascades the thought throughout the organization. Ethisphere, a private firm that evaluates firms' ethical behavior or the responsibilities, uses 7 criteria that provide single ethic quotient score. 1 and 2, 1 and 3, 2 and 3, or 2, 1, 2 and 3. When we talk about the leadership, innovation, and reputation, I think the correct answer is going to be 1 and 2 only. The third part is a private firm that evaluates ethical behavior. No, it's not related to the area of one particular private firm doing that. Only the ethics. Ethics is something that organizations have to do it, because ethics plays a very, very important role in the working of the organizations, isn't it? So answer is A. Identify the wrong statements from the following. The business starts with the production budget, which provides data to prepare the sales budget. The sales budget uses the data from the production budget to calculate the number of products that the company has to produce over the period of time. Sales budget uses a sales figure to estimate its future income, and the production budget uses them to determine its production operations. Only 1 and 2, only 1 and 3, 2 and 3, or 1, 2 and 3. What's going to be the answer? The correct answer to this question would be the business starts with the production budget. The business actually starts with the anticipation of sales. Basically, you always look at the sales that we can make in the year. Then we look at the production, then we look at other departments, and then ultimately we look at the amount of cash that we need. So it never starts with the production budget. It actually answer is A. The business starts with production budget, which provides data to prepare the sales budget. The sales budget uses the data from the production budget to calculate the number of products of the company has to produce over the period of time. if I look at this specific answer, I think I'll go for a little rearrangement of the question, because normally na you find out your anticipated sales. So first is your anticipated sales or projected sales are made. From that you try to find out what is your correct capacity. Based upon that capacity, yes, then the entire thing falls in place. That is, the production budget is based upon the sales that we can make based upon our capacity. Then the sales budget is used upon the production budget, that how many goods we can produce. So this is basically, it starts with the anticipated sales, which leads to production budget. Then it leads to the actual sales budget that we need. So then in this case, 1 and 2 definitely goes with it. Sales budget uses sales figures to estimate its future income, and the production budget is to determine them, uses them to determine the production operations. Actually, all three are correct. The answer should be D, not A, everyone. The answer should be D. Okay? This question requires a little adjustment. The answer is actually D. Okay? The answer is D. Then everyone, let's move on to the next question. Equity shares have a or an unlimited life, voting rights, receive dividends. Limited life with no voting rights but receive dividends. Limited life, voting rights and receive dividends. Unlimited life, voting rights but receive no dividends. Equity means you're putting money at stake. When you're putting your money at stake, what do? Number one, under equity shares, you have an unlimited life. Till the time the organization is there, the equity is definitely there. Then you have voting rights, because you are the one who's taking all the risks. So voting rights are also there. Then number 3, you will also receive dividends for all the risks that you are taking, because equity shareholders are the true risk takers of the organization. That is why the true ownership belongs to only and only them rather than others. It is them who has the right over the organization. Rest everybody do not have the right. The reason is this only, that equity shareholders have they take the risk. Their money is not certain, their growth is not certain. It can or it may not happen, right? So in this case, the correct answer is going to be A. You have an unlimited life, you have voting rights, as well as they receive dividends as well. Hello everyone, welcome to Officer 24/7. My name is Niharika Patnagar and I'm with you with the area of ABFM. What are we going to talk about today? Acha everyone, registrations around the corner. It would soon start in May. That means you are not left with less than a month, I would say. So if you're planning for it, then what have you thought about your future? Are you planning to go for CIB this time, or you want to wait, or you want to go it for the next time? And what is a particular thing that you're thinking about currently regarding your examination? These particular questions should be there in your mind right now. So let's talk about a few things that we can discuss today. So everyone, let's discuss this point of view from our website itself. If you're planning towards the examination of this May only, that means at this point of time you should be clear about which books to read. By this point of time you should be ready with your notes. By this time you should have at least seen the particular subjects that you are looking forward to, because there are plenty of subjects, 5 subjects. The examination has become tougher. They have made it practical, which is theory based. The language has become tougher, and now we have lengthier and new subjects. Not only lengthier, but the problem is these are new as well. That means having new subjects means there's not much level of content which is available, right? So with all these things, everyone, one particular thing that would really affect my thought process would be, how am I going to pursue this examination, especially when I'm working as well. If I'm working, I already have lesser time than many of the people who might not have been working, right? So every in terms of the banking examination, everybody is working among you, but it depends upon your branches as well, whether you have more work, less burden, more burden, and the timing as well. All these things are super important now. Okay, so let's talk about it, everyone. Look at this particular area. If you go on to the CIB Mahapack, you will find our four subjects which are compulsory and one subject which is practical. Combining all these things together, you will find our online live classes, you will find our test series, ebooks, one particular area. I think that will bring clarity to all of you who are actually going for this examination in the in the upcoming July attempt, right? So your examination will be in June, July. So if you look at that particular area, if you go through the courses only, na, let's see. If you go onto the videos areas, we have got different modules. Can you see rural banking there? Rural banking is there. Elective center banking is there. Risk management is there. HRM is there. Or if I look at IT is there. Matlab, if I'm looking forward to any of these areas, at least I have a clarity. Ki maybe if I go for any of these batches, then I can actually review what kind of subjects are there. How do we pursue those subjects further? But that particular clarity comes with this particular exam. Okay, academically, this is how I want to grow further, and this is how what I'll be doing. So clarity definitely comes when we are looking forward to the subject in terms of this part. That if you're planning, then you can see all the subjects here, not only the compulsory ones, but also the optional ones. Plus, if you go for the ebooks, I would suggest if you haven't started it yet, go through the ebooks, especially if possible. If you are going to study on your own, then go through the Macmillan book. And our books are also based upon Macmillan books. So in the ebooks area, you will find all the lectures, PDFs attached here with. And these are the areas where you will find the ebooks in which you will find the Macmillan content precise, squeezed, comprised in such a way that you can look forward towards preparation in an easier language, and that too with a little less bulky book for sure, right? So if you're planning, then these things can really help you. And plus point is that at this point of time, we are currently having our course at a discount where it can go up to, use the code Y541, and as soon as you apply the code Y541, you'll get it for 6823.95, everyone. That means you are actually you're going to get it at lesser price than this, as we are currently having, if you are having our app, then you will definitely have a greater discount, right? So this is the entire area. I think I've given you an entire brief of our courses so that if you're planning, then you should definitely get a clarity of whether you're going for it or not. Right, Chali, let's get back to our course here. Thank you so much for looking forward towards the scenario, and it's time that we look at the course. Done. Now comes the first part. Okay, which of the following domains has a criteria? Acha, this particular area. We were done with. Yesterday we discussed this question, so I'm coming up with the next one. Chale. Which is the one of the key requirements for effective risk management? Deep knowledge of the business, external market conditions, advanced technologies, or increased fixed cost? Which one of the following is the key requirement, everyone? Deep knowledge of the business, external market conditions, or advanced technology, or increased fixed cost? What's going to be the answer according to you? Done. When we look at the risk management can be done only if you have a better knowledge of what we are looking at. That's one of the areas. So in this case, the correct answer is deep knowledge of the business. Next question. What is the limitation of sensitivity analysis? But the sensitivity talks about how sensitive you are in terms of the various variables. The projects have sensitivity. They have sensitivity. What if the initial investment is compromised? What if? ठीक है, the initial investment is compromised, or what if the cash flows becomes a little unstable, plus or minus. All these things keeps on changing, so it provides a comprehensive view of the project risks. It only shows the NPV and one variable is changed at one point of time. It is an objective method based upon mathematical calculations. It is not affected by perception of decision maker. What is the limitation of sensitivity analysis? I think the variables, if changes na, then obviously the entire thing goes down the drain. If my entire thing was based upon what cash flows I'm having, then I think the cash flows are way better, isn't it? So in this case, the cash flows would be based upon, it only shows the NPV. It is showing the plus or negative point. The net NPV is called net present value, the value that you are having currently, and you have one variable is changed at a time. Not all the variables would be changing at one point of time. One variable would change. That is going to be covered in this specific area. What is that first step in performing the sensitivity analysis? Conducting an analysis of project cash flows, in identifying the factors that impact the project's NPV, determining the range of change for each variable, or recording the results of each iteration. First step towards sensitivity analysis. Sensitivity is basically looking at the various variables and you will find out which variable hurts the most. So in this case, the answer would be identifying the factors that impacts the project NPV. I think in the factors, I would like to place the things in certain way that which one has the most and which one has the least. And next point, what is the basis of Hillier models for risk analysis? NPV, IRR, payback, or rate of return? Everyone, what's going to be the answer according to you? Failure model. Failure model is actually based upon NPV. It takes the net present value into consideration. ठीक है? चलिए. Now, in this case, the answer is NPV. How does the Hillier model measure the risk in cash flows? By analyzing the correlation. Correlation means the relationship between these two things. है ना? We'll be looking at all these views, and then next is gonna be by calculating the standard deviation in the cash flows. Deviation really hurts the most, but you anticipate, nahi, I'll get this much or I'll get that much, but you don't get it. It is calculating the standard deviation by assessing the volatility of the interest rates and by determining the profitability index. What's going to be the answer according to you, everyone? Hillier model can be stated as something which is having by calculating the standard deviation of the cash flows. Standard deviation means we have an average. If we are above average, it's good. But if we are below average, it is very dangerous. So in this case, I can say, yeah, by calculating the standard deviation, right? In Hillier model, what is the assumption when the cash flows for different years are perfectly correlated? No risk is associated with the investment, or the behavior of the cash flows in all the years is unpredictable, or cash flows are similar in all the years, or cash flows are vary widely in each year. no risk is associated with the investment, or the behavior of the cash flows is unpredictable. I think when we look at the correlation, now correlation is where things are correlated or related to each other. That means in the first year if it was 10, then the second year it is around 10.5. Yeah, so we can say there's a growth. In the third year I saw 10, 11. So these are related now. You see a uniformity and then you say ki, haan, these things are definitely related now. We can definitely consider it. So in this case cash flows are similar in all the years. Then what is the purpose of simulation analysis? To create real life situations, to find the optimal decisions under the various scenarios, to deceive the decision makers, or to conduct sensitivity analysis. According to you, what's going to be the answer, everyone? What is the purpose of simulation? Simulation can be stated as a real life thing. Do you really think only one problem occurs at a time? Matlab, I don't think so that happens really. Maybe the first thing changes, the second thing doesn't, but the third thing changes too. For example, while going for the classes, I might feel that, array, one particular day now, only the Wi-Fi is fluctuating, everything else is fine. But all of a sudden what happens is Wi-Fi starts fluctuating, then electricity issue comes, and then maybe even the voltage fluctuation would come, and then the weather becomes bad and Wi-Fi also gets down altogether. You just don't know. The variables are so unpredictable. If I say everything is gonna be fine, but then in the economy there's an inflation. I say everything is gonna be fine, and then I see there's another thing which is changing. So in this case, can I say if I took a look at the simulation area, it is a realistic point. While driving, you cannot say just my gears are working fine and I can control my steering, everything is good. You don't know what's gonna happen around. So in this case, you have multiple things happening. That's why we can say this is to find the optimal decision under the various scenarios. So to keep on thinking about a scenario A happens, maybe scenario B can happen. What will happen if there's scenario C? So all those variables and multiple changes which are coming based upon these variables should be considered. And this is a very interesting area. I find this part very interesting. The core difference between sensitivity and the scenario analysis is the sensitivity says only one thing at a time. I am sensitive to dust. That is one point. A business is sensitive to initial investment. Just considering one point. And simulation says, kaha sir, if we talk about the basic point of initial investment, it changed badly. But as soon as initial investment was lesser, cash flow is also changed. So there is nothing in our hand. What can we say about these things? These things change. What are exogenous variables in simulation analysis? Variables controlled by decision maker, variables determined outside the model, variables influenced by other factors, or variables with fixed values. What's going to be the answer? Simulation says that there are things which are not in my hand. As I told you, if I think I can handle my car, but that doesn't mean that I'll be safe on the road. I'll be safe on the road when the other factors are also fine. We are working in our offices because we feel the economy is fine, everything is okay, then we can pursue further. So in this case, when you say exogenous variables, exo means external. So in this case, the answer is variables determined outside the model. What is the purpose of decision tree analysis? Acha, decision tree is a beautiful topic there. Decision tree, if I look at it now, decision tree says you take up one particular scenario, divide it into different areas, keep the probability of this happening, and this happening is this. Now if I go for it, there's a yes or there's a no. If I go for this one, it is a yes or a no. Again, yes or a no. All these things just keeps on changing. So to represent the possible outcomes and associated probabilities, or to deceive the decision makers with complex diagrams, or to evaluate only one outcome, or to calculate NPV of all projects simultaneously. When we look at decision tree, it is based upon probabilities. Okay? It is based upon multiple probabilities, not one but multiple. Done? Chaliye. Then let's look at the next point. What are the two elements of decision tree, everyone? Probability and reward, branch and node, cost and time, or decision and uncertainty. When we are trying to find the two elements now, the first element is branch and second element is node. Okay, these are the two things which keeps on varying. Done. Next point. What is the optimal decision tree? Optimal decision. I think anything which gives us the maximum profit would be the point. That is something that I would like. The decision with the highest probability, the decision with the lowest cost, decision chosen at the starting point of the time, or the decision. This is a predetermined situation. Predetermined is such a bad thing to look forward to, I would say. And when we say about the area of decision with the highest estimated NPV, what would it be? Done. In this case, the answer is the decision with the highest estimated NPV. Which of the following is a controllable risk? There are multiple types of risk, everyone, in a business. So if I talk about the controllable ones, fluctuations, political instability, changes in the government policies or technological obsolescence. I think when I go for the controllable risks can be, I can't control market price. I cannot control political instability as well. um, I think changes in the government policies is something that government will do. One part that I can see is the technological obsolescence. If it comes into my area, I'll just change the particular thing now altogether. That's it.
Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of ABFM.
चलिए,
what are we going to think about today? We're going to talk about the Victory series and another level of questions. But today I'm going to talk about deal structuring. Acha everyone, a very important reminder. Your registrations will be starting soon. So I hope you're all set for your examination. Anna? Because our examination are going to be conducted after the month of June. In the month of July, we'll be seeing our examination coming up. So I think if I talk about end of June and July, we are all set for the examination. The registration dates will be opening up in May. So then I would like to request you all again, please decide in advance which particular subjects do you want to take. This is very, very important that you need to know before you go for the registration what is going to be your optional subject. Why am I saying this? Because till the time you haven't decided your optional subject, na, how will you actually apply for the examination? For example, if you are someone who hasn't decided it yet, or and you have already taken our course, then you have a very big advantage. Let me tell you how. And if you haven't, then you can definitely take up that advantage as well. Go on to our website, that's www.adda247.com. Go on to the specific area, go on to the area of JIB and CIB. In the area of CIB, June 2024, you will find all the details. Why am I saying this? Because we have our Mahapack. If you go through our Mahapack, everyone, this is basically the blend of our test series and ebooks for all the subjects, right? The previous videos of the different batches that we are already taking up, and the 500 hours of online live classes. When we say the live classes here, the live batches that are going on are all covered in this area. But how does Mahapack help you? In the Mahapack, you get all the 5 subjects, everyone. If I have to tell you about that, in the live classes areas, and even if you go to the video courses area, you can see this particular area. You can see the course for CIB rural banking video course. This is for rural banking. Then you have the course for risk management. Then you have the area of central banking, HRM, IT. The marathons are all stated here. That means if the classes are also given further. So if you are planning, then one particular benefit which is unbeatable for you is if you are planning to go for your CIB examination has not decided yet ki which particular subject you want to take up, then watch all these. Watch all these specific options that are available in front of you. What is that particular topic that is better for you? In which particular examination you have greater scope to score more, because ultimately you are the one who has to give the examination. Nobody else is going to give the examination. है ना? It is you who has to give the examination. Then चलिए. So in this case, if you're planning, then I think just go through all these courses. This would be really helpful for you. Just look at all the courses. You don't really have to decide it that way. You just have to just decide when you are looking forward to the specific area of all the courses, first three classes, first class, second class. If you get 80%, 90% of it, then that's it. That means you can take up that subject, because this will definitely lower down your burden. Because first four subjects are definitely not that easy, right? So if you want, then go ahead and check out the Mahapack. Buy it right away, because at this point of time it is available at double validity. You pay for 6 months, you get it for 12 months. I think this particular validity is unbeatable. That's one particular truth. So you just have to use the code Y541 and apply it. You will get it at 80% discount if you are using our app. So then I think this is the perfect time, right? So check it out on our website and our app for further details. Chaliye. That's it for the day, everyone. Now let's talk about our class further. Everyone, please share the session, like it as well, and check out on our website for further details. Everyone, Victory Series. Individual chapters are already done. So if you want to go for the individual chapters as well, that will also be helpful for you. What is deal structuring in context of acquisitions? Deal structuring is basically a situation where you are looking at you're buying some other organization. That means what are the assets and liabilities that you need to decide that you want it or not. You know? Then if you want it, then how do you do this? It is a process to target company for acquisition. It is the process of analyzing the financial performance of the acquirer. It is a process of forming an agreement between the acquirer and the target firm, and the process of negotiating the price. I think I won't call it the negotiation that is required. When we talk about the area of context of deal structuring is what? Is that only the negotiation or anything else? The correct answer is actually it is a process of forming the agreement. Within negotiations, you need to define as well. Now, what do you want? है ना? What does the term deal structure refer to in context of acquisitions? It is the financial performance or legal framework, or the strategic goals, or the negotiations. This is, I think, the same question with a different variety altogether. The correct answer is actually the legal framework of the acquisition agreement. Acquisition means to buy the organization. Done? Chaliye, next question. Why is deal structuring important in the acquisition process? I think deal structuring is very important. Deal structuring is super important because it gives you an idea of how do you look forward towards purchase of other organization. Are we ready for the financial obligation? What kind of things that organization has, and how do we pursue further towards it? That clarity is required now to determine the market value of the target company, to outline the rights and obligations, to conduct the financial due diligence, or to assess the strategic fit between the acquirer and the target company. To outline the rights of both the parties involved, because both the parties are not known about these things, they really feel bad about it. Ki, acha, if the particular purchase or sale of the acquisition is being done, one party can be dissatisfied. You know? Done? Chale. Let's look at the next question. What is the relationship between an acquirer, cash holding, and the likelihood of making a cash offer in a takeover situation? I think takeover makes a very important thing, right? Acquirer with a large cash holding more inclined to cash offers. Acquirer with smaller cash holdings are more inclined to cash offers. Cash holdings have no impact in terms of likelihood, or acquirers with large cash holdings are more inclined to make stock offers. I think if they have good amount of money, then they have more inclined towards making the cash offers. So you can actually say, sir, we have money, can I give it to you the money? Can we settle down with this particular area? है ना? Then the next part is related to the area of when might the holding company structure be preferable as the acquisition vehicle. Holding structure, holding company structure. Holding is basically an organization which has got the right to be there in the business. These organizations are basically when a target company has its low abilities, or when the acquirer plans to immediate integration, when the target company is a foreign company, or when there are no tax benefits. See, when we are looking at this point of time now, I think if I have acquiring in terms of a holding company, the answer would be when the target company is a foreign corporation. I think if you are looking at a foreign company, think about it, you bought a specific organization, then what will happen? If you buy a specific organization which is a foreign company, that has a stronger effect, na? Then next question. Acha, next question, na? The next question says, uh, when the in what situation might an acquirer use its stock as principal form of the payment instead of cash? Simple. If you have cash, you will make the payments in cash. You'll say this is the cash offer, I think we are all settled and we are leaving. है Otherwise, what will happen? If we do not have cash, we'll offer stock because that's one of the best things to do. When the integration of the target company will be quick, when the acquirer has high debts or the target company is highly levered, or integration of the target company will take significant period of time. When we look forward towards this era, the answer would be when the integration of target company will take a significant period of time. So it's always better to give them this particular scenario. Done? Chali, let's look at the next question then. Now, let's look at the next question, everyone. Why might an acquirer offer a mix of cash and stock to the people? I think having cash and stock together, it's a beautiful topic to take up. Why? Because think about it, if you give cash, then half of it is settled. Remaining, we're giving them stock. That means we're giving them a part of our company, na? To motivate the target shareholders to participate and to avoid delusion that comes with an all stock offer and to reduce the overvaluation of the acquirer shares, or all of the above? The answer is all of the above. Everything is very important. है ना? Next point. What problem does the multiple option bidding strategy generate? I think when you give multiple options, people can definitely look forward towards the specific area which they find suitable. Difficulty in about the value of the target company, uncertainty, then difficulty in predicting the amounts or lack of interest from the target shareholders or inability to determine. When you're giving that multiple option, one problem is how much cash do we need? Because you're just looking at all the options, you need a solution for that, na? Okay, this is what we want and this is what we're taking up. What are the main considerations? What are the main consideration in tax and accounting aspects? In terms of tax and accounting aspects, to be very clear about it. Ensuring compliances with the financial reporting requirements and minimizing the taxable income, maximizing tax benefits and reducing accountable liabilities, reinforcing purchasing decisions and ignoring core economic aspects or overriding accounting concerns with tax implications. Main consideration in tax and accounting. One of the basic problem is to actually ensure that the financial reporting is going well and to minimize the taxable income. See, if you want to minimize your taxable income, na, for that what you really need is minimizing can be done by tax planning. ठीक है ना? Tax planning is basically looking at what particular method you can reduce it to the maximum. Not the other way around, okay, let's try something fraud and then reduce our taxes accordingly, because that can create a lot of problem. Then, which of the following transactions is considered taxable to the shareholders of the target company? What's going to be the answer? Cash purchase of acquirer's shares, stock for stock exchange, purchase of the target assets with acquirer's debts, or acquisition through the share swap. Which of the following transactions is considered taxable? See, if you had stock and you gave stock, that will not make a difference. You know, the main thing is purchase of the target assets with acquirer's debts. If I take debts and then I use it to purchase, then I can definitely tell people that this is not good na. Then actually I can claim all the interest there. है ना? Done. अच्छा, the next point. What are the changes in the legislation in 1993 made taxable transactions more attractive to acquiring corporations, allowing the tax deductions for acquisition related expense, permitting amortization of certain intangible assets for tax purposes, induction of tax credit for acquisition financing, reduction of tax capital gains. In this area, the basic thing the taxable transaction says is permitting the amortization. You can cry that you had incurred some expenditures and you can write it off over the period of time. That is to be covered under B point. Done, everyone? Good morning, everyone. Welcome to Upsala 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of ABFM. Hello everyone, I hope you're doing well and at the same time you have been preparing well for your examination. We have time. Earlier our examination was supposed to start in see, our examination normally starts in the it started a little earlier last year. Though if I talk about the reality, things are changing a lot since the syllabus changed. This year we have the problem related to the area of elections being clashed in the JIB area. So we have there were changes in the JIB examination recently as well, but our examination is way after, so I think we are good to go. Our examinations will start in July and then we have June July area for our exam. And everyone. Acha, with this I am done with all these things individually already. I hope you remember that part. We are done with all these classes individually. Individual chapters are all sorted, but now I'll be talking about the blend of multiple chapters. So this is basically a blend of multiple chapters that we are taking up. I have also discussed many of the chapters as well, individually as well as mixed chapters, entire modules as well. So let's look at it, everyone. How do we pursue further? We are looking at the victory series. In the victory series, what's the first thing? Acha, this is related to the area of tax-free reorganizations. Acha, what does the step transaction theory aim to prevent a tax-free reorganization? It aims to prevent acquirers from assuming the liability for target company debts. It aims to prevent the target shareholders from receiving excessive compensation. It aims to prevent transactions that resembles sales from quality as the tax-free reorganizations, or it aims to prevent target companies from retaining the control over the business operations. Its basic work is basically to prevent the transactions that resembles the sales from qualifying as tax-free organizations. See, sometimes you are making sales and you are making good money. But what if this money is taxable and you are putting into reorganizations? So they make sure that this doesn't happen. Na? Done, everyone? चलिए. The answer is C. They try to prevent the transactions which are actually not taxable. They want that only the not taxable areas should be removed. The ones which are taxable should not be included. Done? Chale. Moving on to the next point. In US, what is the period for net operating losses that can be carried forward or backward? Is it 10 years and 10 years forward, 5 years backward, 20 years forward, 2 years backward? And then we have there are 15 years forward, 3 years backward, or forward for 5 years and backward for 10 years. What's going to be the answer, everyone? In terms of US, you can extend it up to maximum 20 years forward and 2 years backward. In our country, we cannot have backward losses in terms of this. They can be carried forward for maximum 8 years. But the depreciation can be continued. है ना? चलिए. What conditions must be satisfied for the capital gains arising from the transfer of the assets to be exempt from tax and amalgamation? The amalgamated company must be a foreign company. The scheme of amalgamation must satisfy the section 47(5). The scheme of amalgamation must satisfy the section 2 subsection 1 subsection B, and the scheme of amalgamation must be approved by RBI. If you really want exemptions, there's only one point. That was 2 subsection 1D. Done, everyone? चलिए. What is the significance of amalgamated company? What do you mean by amalgamation, everyone? Normally 1 plus 1 is equal to 2, है ना? Normally we say that 1 plus 1 is equal to 2. What if in an organization, if one has positives, second one has positives, and this becomes more than 2? Because both of their positivities are to be added there. Then it becomes more than that. What is the significance of the amalgamated company being a company for tax relief purposes? है ना? So what do we do in this case, everyone? What's going to be the answer? It ensures the it ensures the compliance with foreign tax laws. It facilitates the transfer of assets across the borders. It allows easier regulatory approval, or it is requirement of the exemption from capital gains tax. Amalgamated company and Indian company. See, in case of amalgamation, when two companies amalgamate, it is covered under section 47. If one company has shares and it gives shares to other company, then this is movement of shares. Nobody is getting money and nobody is spending money. If nobody is getting money, nobody is spending money. Then I think in this case there's one particular thing which is absolutely clear. There is no tax. It is requirement for the exemption from capital gains.
Chaliye, let's look at the next question. In case of transfer of shares, everyone, we're talking about the transfer of shares. When a transfer of shares by shareholder of an amalgamated company not regarded as a transfer of for capital gain purposes, when the transfer is made in consideration of cash payment, when the transfer is made in consideration for allotment shares in the amalgamated company, when the amalgamated company is a foreign company, or when the transfer is made without any consideration. What's going to be the answer? Amalgamated company not regarded as a transfer under capital gain. When the transfer is made, if you have cash payment, it becomes taxable. It is an amalgamation is covered here, which this means that the companies are merging together, but there's one particular thing which is clear, that with this clarity, the amalgamation involves a payment of cash, which is taxable there. So the first point is definitely true. When the transfer of is made under consideration of allotment in amalgamated company, when the amalgamation is with the foreign company, it is considered here. When the transfer is not made without any consideration, I think if we talk about shares now, if you have shares, you give shares. When the movement is totally on the basis of shares, it's based upon only one thing. When the transfer is made in terms of allotment, shares versus shares, there's no movement. है ना? चलिए. Done, everyone? Under section 47 subsection 7 of Income Tax Act, what are the capital gains arising from the transfer of the shares by shareholders of amalgamated company exempt from tax? When the transfer is made in consideration of the cash payment, when the transfer is made in consideration of allotment of shares of the amalgamated company, when the amalgamated company is a foreign company, or when the transfer is made without any consideration. What's going to be the answer? Even though it's a transaction but not stated as a taxable one. When will this happen, everyone? What's going to be the answer? In this case, what's going to be the answer? The answer is when the transfer is made in consideration of allotment of shares in the amalgamated company. See, amalgamating and amalgamated, the company which is converted into some other company is to be considered here. A new company is being bought. So when one company is converted into another company, that is to be considered in this case. An old company is now a new company altogether. So when we are trying to have this kind of situation, this is where the organization is looking at what? They're trying to expand. When you're looking forward towards expansion, you are amalgamating with another company. You want the growth, so by looking forward towards the growth, you will look at, you are amalgamating companies, the companies which will become one later on, and the company that is being formed is called amalgamation.
limited company. That is the difference between these areas. We have amalgamating and amalgamated. This is what is trying the process, and this is the ultimate reach. The rule says in terms of direct tax, and this one particular beautiful point. That is, if you enjoy the money, you pay tax. If you don't enjoy the money, why to charge money from you? That is to be covered in this area. Okay? Done. Chali. Now let's look at the next point. What conditions must be fulfilled for a company to take advantage of the carry forward of accumulated losses and unabsorbed depreciation under Section 72A of the Income Tax Act, everyone? But there are certain rules. If one company is facing losses, it can continue. It can try to make the losses a little better. The losses can be recovered. And we have to make sure that we are recovering the losses altogether. And how do we recover the losses? If it belonged to the previous organization, they will continue with the new organization. This will ensure that the new organization is also getting money. It is also getting the benefit of all the losses which the previous organization genuinely faced. So in this case, there is one particular thing which they clearly say, that when we are talking about the organizations altogether, then every organization is looking forward towards growth, and that is why if they have to amalgamate or join hands with other organizations, they will do it duly. So in this case, when they do this part, then the amalgamated company should be a foreign company. It should be engaged in the business. It should be an Indian company, or it should not be a public sector company. It has to be only one thing, an Indian company. A past Indian company can give its losses and depreciation to the new Indian company. This is allowed. If the past Indian company is not there, then new Indian company cannot get the funds. So we need to have two Indian companies which are amalgamating. ठीक है ना? That is something we cover. How long must the amalgamated company hold at least 3/4 of the book value of the fixed assets? 3 years, 4 years, 5 years, or 6 years? If you are an older company, now it becomes a new company. New company has to hold all the assets and liabilities of the previous company for a certain period of time, that to 75%, also called 3/4. In the law, it is written 75% of the previous company's assets and liabilities has to be taken over by the new company. And not only they have to take over, but they also have to keep it in their hands. Okay? Done, everyone? The answer is 5 years. Chaliye. Let's look at the next question. What is the consequence if the specified conditions for amalgamation are not fulfilled? Amalgamation is cancelled. Amalgamated company receives tax benefits. Business loss and unabsorbed depreciation are treated as income, or amalgamated company receives government funding. The consequences of specified conditions for amalgamation are not fulfilled. When the amalgamation is not fulfilled, there's only one problem, that is business loss and unabsorbed depreciation are treated as income. These things which could have been carried forward, which the company could claim ki the previous company faced losses and the present can also utilize it to set off
this utilization will not be allowed. That's the worst part, that even if it was justified, even if this was the reason that you amalgamated two companies because one of them was excessive losses, so that's to be covered. Done. चलिए. चलिए. What is the rate at which income tax is levied under MAT if the amount of income tax payable under the general provisions of ITA is less than 15% of book profits? It is 10% or 10%, 15%, then is 20%, or the last is 25%. In this case, the answer is 15%. Chaliye, then this is it for the day, everyone. I hope this session was helpful for you. If it was, then please let me know. Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of ABFM. I hope I'm audible as well as visible. I was just waiting for the confirmation. So please let me know if I'm audible as well as clearly visible. Acha everyone, this is our victory series going on. This is a blend of multiple topics. Earlier I had completed one specific series which was specifically chapter wise taken. Hai na? So now we are starting with the next area. Before I proceed further, everyone, please make sure that you are liking the session, sharing it among your peers, and at the same time, don't forget to subscribe our channel if you haven't done it yet. And if you're planning for our courses, then this is the perfect time. Please go ahead and check out our courses right away. Okay, so what can you do for that? Let me show you. Chali. Before I proceed further, I would like to show you the specific area altogether. That is our website. Let's go to this area. You have to go on to the area of www.adda247.com. Once you go on to the specific area, go on to the area of CAIIB June 2024. As you can see, the double validity is going on, everyone. I think one of the best things to look forward is to have the double validity for you. What you need to do is use the code Y541 and you will get a discount of 80%. How 80%, everyone? It is currently at 79% here, but if you download the app, you will get another 1%. So that will come out to be 80%. So if you are planning, then hurry up and check it out on our website, on our app for further details.
As the time is ticking away before this double validity ends, everyone, go ahead and grab it because you are getting 6 plus 6 months, which is the perfect time. So go ahead and check it out right away, everyone. Chaliye. So I hope looking forward towards the course. Acha, one more thing. If I talk about the CIB Mahapack includes bilingual English medium both. It includes revision batches, current batches, future batches, everything. Test series and even ebooks. That means if you are preparing, then you get everything under this Mahapack, that too in both the languages. English, that is bilingual, or English. So you really don't have to worry about how to proceed further or how to look forward towards our classes there. So if you're planning, then hurry up and check it out right away. Okay. Chaliye, then let's get back to the victory series. Acha. Here comes the question, everyone. We were talking about speculation. We were talking about mergers and acquisitions. And now we are talking about special cases of valuation as well. So these are the three topics that we're going to talk about together. Done? Acha, what is the provision of income tax regarding the excess MAT paid over normal tax liability to be carried forward for set off in future years? The MAT credited exactly kept where exactly? Why do we keep it? ATG or 115 BB or 115 JAA or ATD? See, ATC, ATGD, these are somewhat different. When we talk about this specific area of ATG and ATD, these are deductions. Okay? And when we talk about the specific area of 115 BB and JAA, the answer is 115 JAA. Then chale. Now let's move on and talk about the next question. Which of the following scenarios might be subject to scrutiny and interpretation regarding the exemption under Section 47? Section 47 is related to the area of capital gains of the Income Tax Act. Allotment of securities and payment of cash consideration to shareholders of the amalgamating company, distribution of dividends, issuance of bonus shares to existing shareholders, or transfer of shares between unrelated parties. What's going to be the answer, everyone? What's going to be the answer? When we talk about the specific area of scrutiny, scrutiny is how we can define it. Na? The scrutiny can be the area where you are being talked about. Whether, see, capital gains is an area where you sell an asset and you are chargeable to income tax. You buy an asset and then the person who is selling you will be subjected to income tax. So there you have to really look at this specific area. How do we get the answer? You know? So when we are trying to find the answer of this, the answer is actually allotment of securities or payment of cash consideration to shareholders of amalgamating company. Basically, if an amalgamation is being done, there are certain rules. Number one, there are two companies which are amalgamating. They can be A1 and A2, and they can become amalgamated. Amalgamated company is A1, A2. If you had shares of A1, they can become shares of A1, A2. They become the shareholder, right? And A2 also get the shares in A1, A2 because this takes over all the assets and all the liabilities. So both the assets and liabilities of this company is with the amalgamated company. In this case, they clearly say that if this is the scenario, what do we do? In this scenario, the only thing that we can do is, first of all, 75% of these particular assets and liabilities shall be held for the next 5 years. There's a lock-in period, and at the same time, the 3/4 of the shareholders should also continue. Then at the same time, other than shares, there should not be any transaction. Matlab, that means they clearly say that in this case we will not deal with anything else, but we will deal with only and only the transactions which are not taxable are the ones where the movement is only and only of shares. You had shares of one company, now you have got the shares of another company. If you are doing anything else, that means if you are not buying getting shares of one company to another company, that is to be covered here. Done. Chaliye, let's look at the next question, everyone. When might the issue of availability of MAT, minimum alternate credit tax, arise in the context of mergers and acquisitions? If I look at merger and acquisition during the negotiation phase, during post-merger integration, or when filing the returns, or when preparing financial statements. But the MAT is applicable exclusively on companies, and on individuals they have something called AMT, alternate minimum tax. So if you earn more than 20 lakhs only, then AMT is applicable to you, but for companies MAT is not an option. If the taxation as per MAT comes out to be more, then you have to give more of that. So in this case, what's going to be the answer? When the filing of income tax return is being done. So that is where we talk about this specific area altogether. Okay? Okay, everyone, if you haven't subscribed to our channel yet, then first of all, please subscribe to our channel, because there are so many things that we are coming up with, so you can get updated about the future classes and everything else without any trouble. And so that's one particular thing you should do, that is subscribe to our channel. Acha, next question, everyone. How are trademarks, copyrights, and licenses valued? By estimating the expected cash flows and applying the discount rate, or are we doing this by multiplying the revenues and the incomes, or both A or B, or by analyzing the market trends only? What's going to be the answer, everyone? In this case, what's going to be the answer? The correct answer would be copyrights, patent, trademarks are all intangible assets. All the intangible assets are based upon the two things, that is both A and B. That is estimating the expected cash flows, what is the money that we can generate through this, and by using a multiple of revenues or incomes. Done. We can have multiple revenues and we can have multiple incomes. Done, everyone?
Chaliye. Then comes the next question. Uh, what does owning a franchisee grant the owner? Acha everyone. For example, I went to Subway and I said in my area there is no Subway. I would like to open a Subway in my area. That means I'll take a franchisee, है ना? That's what we'll do. So how do we open a franchisee? The company allows us to start with an organization, isn't it? They would be allowing us to share the books of accounts. They would be allowing us to relate to them. They would be allowing us not only to work in the certain manner, but they will also give us the particular the details of the how Subway works in its food chain. They will give us the right to use their name. So exclusive right to produce the branded goods, the right to enforce exclusivity indefinitely, or the right to promote and sell the company's branded goods or services, or ability to avoid legal and monetary costs. The thing that you are allowed to do is if you have a franchisee, then you have the right to promote and sell the company's branded goods or services. You can either sell their goods, you can either sell their services. You have the right to do this. Done. What does discounted cash flow valuation approach involve? Comparing market values of similar companies or isolating the percentage of cash flows attributable to intangible asset, looking at the money invested, or then capitalizing advertising expenses. Everyone, discounted cash flow is basically a scientific, it is actually a modern method. There are different methods that we study about, but this specific method, if I talk about the discounted cash flow, that talks about the future that we have with the organization, knowing that over the period of time its value can either increase or it can either decrease. There can be only two things, huh? There can be an increase or a decrease. So when such a things can happen, you are isolating the percentage of cash flows attributable to an intangible asset. Matlab, you are looking at each and every cash flow and you are discounting it further, trying to find out how the value is changing over the period of time. So the answer is B. Isolating the percentage of cash flows attributable to the intangible asset. Which approach is considered as least subjective? That is capital investment, discounted cash flow valuation, relative, or market comparison. Under market comparison, you are looking at the market and you're trying to find out your situation. Relative valuation means if I'm valuing my organization on the basis of some other organization, how is your organization valuing itself, and if it is similar to mine, how do I do the same as well? Then comes the specific area of the discounted cash flow. That's a scientific technique which talks about, it is actually among the modern methods in under which we know that the value of money over the period of time falls. So we need to know what to do about it. And then the last one is capital investment. So but the 3 points, which is B, C, and D, they do not really satisfy the point. In this case, the answer is capital investment. Done. What is the significant difference between real estate and financial assets? Achha, real estate is basically infrastructural development that can happen through this. We have land, we have building, all these areas. Na? Real estate investments have limited lifespans. They don't. Financial assets are less liquid than real estate, or real estate investments are considered less risky than financial assets, or financial assets are not subjected to appraisal. See, real estate plays a very important role these days. It has gone up, but what has happened exactly? Financial assets are subjected to appraisal. The last part is wrong. Real investments are less risky than financial assets. No, we cannot say that. Sometimes shares can turn out to be preference, debentures can turn out to be way more safer option than anything else. Financial assets are less real liquid. Actually, they are more liquid.
real estate takes a lot of time to materialize sometimes, you know, so they are normally long term, but at the same time their life ends as soon as the particular project is done. So I think in that case, if the project life is to be considered, and to be considering the fact that once the project is completed, we have sold it to certain people, then the things definitely changes. So in this case, the correct answer is going to be real estate investments have limited lifespans. Done. Next question. Why might the terminal value of building be less than its current value? The building's value decreases as it is used. The building value increases over the time. Land component of the building has endless life, or the building value remains constant over time. Basically, when we have a land and building, na, this is your land and this is your building. We say land and building are pertinent there too. That means it is attached. But there is a life of building, but not of the land. So in this case, whenever we are noting down the value of the building is used every single day. It is being used, obviously. There are requirements for infrastructural development, maintenance, then to keep on the particular area up to date. All those things are required. That means the building value is decreasing because it is being used. That means it is subjected to depreciation. Done. So in this case, this is the point, that is the value of the building decreases. Chali. Then comes the next point. What is the step for evaluating the real estate investments using discounted cash flow? Determine the future value, determine the level of risk, and estimating the appropriate discount rate, ignoring cash flows and focusing on physical attributes, or estimating the asset's current market value. What is the step involved in evaluating real estate investments? Everyone? What are the steps involved in real estate? The steps involved is determine the level of risk and estimating the appropriate discount rate. Done? That's the risk. That is, you need to find out the risk and you need to use the particular discount rate. See, if you are looking forward towards motivation, the motivation comes with greater the risk, greater the returns. If the returns are higher, then you feel pumped up ki nahi, I want this. Right? Chaliye, that's the end of the day, everyone. Let's end the session here. But before I end my session, let's look at our website again. If you're planning, then purchase our Mahapack right away, everyone. Because if you purchase our Mahapack, it is way beneficial for you. As under the era of the Mahapack, you will get a particular discount of up to 80% along with double validity. All you need to do is use the code Y541 and get our Mahapack right away. Revision batches, normal batches, classes, recordings, everything. You name it, when we have it. Everything that we are putting on the JIB, CIB wing, everything will be opened up to you. So please make sure, if you're looking forward towards CIB, then you should buy the CIB Mahapack, because under CIB Mahapack, you will get the entire CIB optional subjects as well as the compulsory subjects together. So do not let this good opportunity go. Buy it at the lowest cost by using the code Y541. Thank you so much, everyone. Let's meet up in the next session.